Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Markets rally on Jerome Powell's hints that the Fed may be finished with its most aggressive tightening cycle in 4 decades.
That's the question we're asking is, should we hike more? Slowing down is giving us, I think, a better sense of how much more we need to do if we need to do more.
Next up, it's the Bank of England. The central bank may hold rates as evidence grows that the UK economy and the labour market and inflation are all weakening. And the earnings season rolls on. Novo Nordisk sales surge on the frenzy for obesity drugs. We speak to the CFO live this hour. A very good morning. We've got breaking news. We've had it from Germany. We've had it from France. We've now got the composite Eurozone area, Euro area, October manufacturing, 43.1. The preliminary was for 43. So just ever so slightly better. There's euro dollar at the moment, as you can see. France is contracting for 9 months. Germany's contracting for 16 months. We know there's a recession, so it's a question of how brutal it is in the manufacturing side. But there's a little bit of a better bid to the euro this morning, euro dollar up. But of course, it was those words, "We've come very far," that shifted the dynamic for the bond market. 23 basis points in the space of 2 days. We're shifting another gear this morning on those bond markets. The bond market is doing our dirty work for us. Let's have a look at the cross assets this morning because, of course, we continue with the movement in the bond markets. 495 on the 2 years. Now, the quarterly refunding was less than the market estimated. That, of course, will impact the longer end of the curve. But I like what JP Morgan had to say. The Fed and Powell was the happy warrior because, of course, he used the phrase dots decay, trying to take the heat out of another hike this year. So they're in this quasi-pause to hold mode. JGB's at the bottom of your screen. So, of course, as you see a shift in the yield on the downside for the bond market in the United States of America, that also has implications for the Japanese bond market in terms of a lid. The dollar rolled down yesterday. It's a 2-day drop down by 0.4%. Steve Englander says there's still a vulnerability in the dollar because there's still a little bit of a risk that we're not done with cutting yet. They're trying to shift to this pause mode. Dollar yen, it's worth reflecting on 150. I mean, it's music to the Ministry of Finance's ears, isn't it? It's music to their ears that the Fed could be closer to the end, and that helps them perhaps with this dollar rolling over and helps them with their yen. Danny, good morning.
Good morning, Manus. Yeah, this idea that they just kind of have to bank on the global bond market rally, not a continued sell-off. Well, let me tell you, the sell-off from bonds yesterday, it was received with big old wide open arms by the equity market. A rally of more than 1% for the S&P, nearly 2% for the NASDAQ. That continues on in the future session, up 0.5%. Your VIX, it falls back below 17%. In fact, we started the week above 20, above 21%. It shows you the relief, the sigh that's taken place in this market. But, Manus, the issue is that the earnings season has been, shall we say, spotty. Bloomberg has run the numbers. A majority of companies, like we've never seen before, are talking about weakening demand on their earnings call. Should the pace of mentions continue, it will be the most talk of weakening demand since at least 2000. That's what our data goes back to. So there's a concern. We're going to get Apple after the bell today. That's going to be the next indicator, at least for what tech is doing. And, Manus, because Europe was, the U.S. was off having a party in the equity market while Europe was closed, we're catching up this morning, up nearly 1.5%. Novo Nordisk helping that. Strong sales, you'd mentioned that. They're up about 2% so far this morning, adding to the rally in Europe. Manus, as we're debating this idea of the rally continuing in bonds, I do want to reflect on the MLive poll survey right after the Fed decision. About 160 respondents from the terminal. A majority of the respondents, I think we have the graphics for this too, did say that they don't think yields have peaked yet. That's these two groups here. Now, the majority of them, Manus, think that we won't go above 5.5%. That's this. But here's the thing. Was yesterday just a flush out of positioning, or was it the peak is in? Again, our respondents from our survey say, nope, the peak's not in yet.
Well, I mean, if you reflect back on what Feroli said over at JP Morgan, he referred to this happy warrior kind of syndrome that Powell had. The question that goes through my mind is whether they have just undone the brutal work that they've had to put in. I mean, this bond market has done 0.75 of a percentage point of rate hikes. Have they done the usual thing, where they lose, they run the risk of losing credibility, having made those kind of comments, pretty significant progress on inflation. Wage inflation, it's come down significantly. I feel good about that. We're not interested in how people feel. We want data, and we want something much more exacting. Danny.
Yeah, it's a really good point. They're cheering on a market doing the work for them. Does this rally mean, as you say, the work's undone?
Exactly. Well, of course, next up, it's the Bank of England. They're likely to hold interest rates after evidence that the UK economy and inflation is weakening. Joining us now is Lizzie Burden. We are going to see what really happens in a short while. But the economists and the investors, we had one guest yesterday who says another 2 hikes are what is needed to defy and kill off inflation in the UK. Good morning, Lizzie.
Morning, Manus. Well, that's not what markets and economists are expecting. They're expecting a hold today, and that we're actually at this peak of Table Mountain. All this talk of mountains sounds a lot like a dot plot to me, but never mind. The idea is that the guidance from the past meeting will just be copied and pasted over, sufficiently restrictive for sufficiently long, which would mean that the focus today won't be necessarily on the decision, but more on the updated forecast alongside it, specifically whether the Bank of England sees a recession on the horizon for the UK economy and therefore whether it's going to cut rates. Now, the Governor, Andrew Bailey, has said that talking about rate cuts is premature, so echoing Christine Lagarde at the ECB, but markets are pricing 2 rate cuts next year to 4.75%. What will be really interesting, Manus, in this forecast is whether the Bank of England sees inflation dropping below its 2% target, because that could mean that investors double down on these rate cut bets. It could spark a rally in gilts, and of course it wouldn't be good for the pound.
I mean, I'm just looking, Norges Bank just out with their decision saying that they see their policy rate likely raising in December, despite the fact that they've held today. I mean, you do have central banks talking about the resurgence of inflation, and we're debating weak data here in the UK. I mean, is the UK going to be an outlier here where perhaps they're one of the first to cut?
Possibly. You've got the Dove on the committee, Swati Dhingra, making the case that only a quarter of hikes have fed through so far, but you've also got the chief economist, Hugh Pill, saying that's actually closer to half. You've got an unknown quantity on the Monetary Policy Committee at this decision in the form of Sarah Breed, and she's replaced one of the hawks, John Cunliffe. So it'll be interesting to see how she votes. The expectation is that she's going to vote with the majority, the internals, going for a hold, but watch out, because we could get a 3-way split today.
All right, Lizzie, staying dry inside. I'm happy about that, too. Lizzie Burden here covering the BOE. It is a very rainy day over at Threadneedle Street. And, of course, tune into our special coverage of the decision, 8 a.m. Eastern, plus our interview with Governor Andrew Bailey. That's at 4 p.m. here in London. All right, let's get you set up with some other top stories that are trending on the terminal this morning. Shell Manus is accelerating the pace of share buybacks as third-quarter profit rises on a combination of higher energy prices, strong gas trading, and wider refining margins. The company's performance, which matched analyst expectations, caps a mixed earnings for big oil.
Well, Disney expects to buy Comcast's 1/3 stake in Hulu for around $8.61 billion. The statement marks the start of negotiations expected to last months. The companies have previously said that the final price will be settled through an appraisal process and is likely to involve up to 3 investment banks.
And Vanguard is taking its last steps to exit China and shut down its office in that market. As Vanguard reverses its strategy in China, competitors, including BlackRock and Fidelity, have boosted their onshore presence, betting on the nation's economic growth and pension reforms.
The U.S. President Joe Biden says Israel and Hamas militants should pause fighting in order to allow to free hostages held in Gaza, but stopped short of supporting a full ceasefire. He spoke at the opening of the Rafah crossing yesterday.
Safe passage for wounded Palestinians and foreign nationals to exit Gaza has started. The American citizens are able to exit today as part of the first group of probably over 1,000. We'll see more of this process going on in the coming days.
Oliver Crook is on the ground in Tel Aviv. Oliver, the latest developments, you've just heard from the president. 600 people are expected to leave Gaza, and of course these will be foreign passport holders. The latest, good morning.
Yeah, so Manus, what he was alluding to was yesterday the first flow of human beings that are actually leaving Gaza into Egypt. There were two categories of people. There were the wounded that were carried out by Egyptian ambulances to a field hospital in northern Sinai. But then the second, as you mentioned, the foreigners, the first foreigners able to depart. And we got the list today overnight from the Hamas Crossing Authority of 596 names of people that will be permitted to cross again today, 400 of whom will be American citizens, and then the others will be from other nationalities. We understand that the Egyptians are preparing for as many as eventually 7,000 people to cross that border in the other direction. We understand that this was also in part brokered by Qatar. And again, let's also focus on what's been going on the ground in terms of fighting. It has been concentrated, continues to be concentrated in the northern part of Gaza. And we understand from the IDF that the forces of the Israeli forces have reached the sort of outer gates of Gaza City, and that is the state of play this morning.
We also are expecting Blinken back in the region tomorrow. Oliver, how are diplomatic efforts progressing?
And you have to imagine what this is for Anthony Blinken. So now he's going to return tomorrow. He's going to be in Israel, but he's also going to be in Jordan. And what has changed since his last visit? Well, a couple of things. For one thing, you're much further from the attacks of October the 7th, which is going to make a difference in terms of where people are paying attention to the events from the 7th to what is happening today. And in that period of time, according to the UN, you now have 8,800 people in Gaza dead, 2/3 of whom are women and children. And this, of course, is going to dominate the attention of the international community, but also obviously in the surrounding countries. The Jordanians have pulled their ambassador to Israel yesterday, have recalled them. And remember, Jordan is one of the first countries in the region to make peace with Israel. That was back in the 1990s. We've had the comments from the king and the queen saying that the impression the West is giving is that Palestinian lives matter less. Of course, we also heard from Benjamin Netanyahu this week, who says there is absolutely unrelenting on the ceasefire. There is not going to be a dial back of the military presence, but does this perhaps, if you're not going to pull back the military, give more incentive to get more aid and potentially these humanitarian pauses some consideration?
Okay, well, certainly the nuance is there, isn't it? The president calling for a pause, but not a ceasefire. Oliver, thank you very much. Oliver Cook in Tel Aviv. Coming up in the show, we've got an earnings surge. We sit down with the CFO of Novo Nordisk on the growing demand for the obesity drug set. Danny.
And up next, first, though, Manus, we're going to talk about the Fed and that BOE decision. Gordon Shannon of 24 Asset Management joins us. This is Bloomberg.
We're going meeting by meeting. We're asking ourselves whether we've achieved a stance of policy that is sufficiently restrictive to bring inflation down to 2% over time. That's the question we're asking. We're looking at the full range of economic data, including financial conditions and all of those things that we look at. And then we've come very far with this rate hiking cycle, very far.
Fed Chair Powell speaking at yesterday's news conference, maybe a less hawkish tone than expected, plus a weaker ISM, plus a lower amount for the quarterly Treasury refunding allowed this huge catharsis in the bond market and a rally. Joining us now is Gordon Shannon, portfolio manager at 24 Asset Management. It was pretty breathtaking. I mean, the biggest drop in 30-year yield since November of last year. How much do you look at that and say, oh, great, the peak is in, we can rally from here, versus this was just a position clean out?
So I think the key is to look at the different announcements yesterday and the different forms of rally. So going backwards, we had that dovish pause, and from the announcement to the end of the press conference, about 4 bips came off the 10-year. Then before that, we had the ISM drop to the downside, biggest drop since 2014, and we had about a 5 basis point drop on that. But the biggest mover was the Treasury update. And that caused a 7-bip move when they announced 114 or 112 billion instead of 114. So it shows how much focus there is on supply. I don't necessarily see that problem getting much better. So that really is the overhanging issue here.
So is this, I mean, by the way, they're going to issue, good morning, Gordon, they're going to issue $40 billion of 10-year paper, which is up slightly from the last funding round at $38 billion. Are we going to choke on the supply? Is there a moment when this bond market really will choke?
I mean, I want to say that. I want to talk about Venezuela, but let's not jump there just yet. I don't even necessarily think we have to talk about the gilt crisis from last year. But I think when Yellen says it's not term premium, it's just expectations of inflation, she's talking her own book. It's clear now that there's not an infinite appetite for US Treasuries. So whether we choke, indigestion for sure.
Where my mind goes is if there's still going to be more supply, if there's not infinite demand, what happens to QT?
Yeah, well, that's that. Powell tried to kind of dismiss it. They're not going to change it. And in fact, people tried to draw him on longer bond yields moving. How many rate hikes is that worth? He wasn't drawn on that. But no one's going anywhere near how many rate hikes is QT worth. And again, that's a huge overhang. When we look at what the Treasury's doing, they still have outside their normal range of T-bills. So they previously 15 to 20% would be the normal range there. When asked about that, they said, oh, well, that's just a rule of thumb. Oh, so we're going to go towards 25%. When are you going to fix this? When are you going to push things further? Or are they betting that those yields come down, betting/praying?
So, Gordon, if you look back over the history of guidance and rhetoric, transitory, they didn't get that right, did they? They really didn't get that right at all. I mean, they were way off in a distant land. Higher for longer, obviously that's shredded now. So is it higher for shorter? I mean, they've run the risk of losing credibility again by this. He's pleased with inflation. He's pleased with wages. It's coming down nicely. I'm not talking about cuts. It just smacks of a lack of credibility.
Yeah, well, they see this opportunity to have inflation down without recession, or it's not so much opportunity but hope. And it seems like they've decided to bet the farm on that. When you're throwing away decades of credibility if you don't get it right. It's too early to tell. Things are going in the right direction, but whether or not wage growth plateaus at a level well above sustainable for the target, that's still unknown. So it kept some optionality there for a hike in December, but it'd really take quite a big shock.
Well, not unrelated is that, a lot was made that they put tighter financial conditions in the communique. And talking about the bond market rally doing the work for them, Richard Clarida also brought this up yesterday, saying, well, they get themselves in a bind because what happens if the rally continues and then financial conditions ease? I mean, have they put themselves in a bind by referring to financial conditions?
I suppose they try to avoid the bind by Powell's focus on persistence of those. But yeah, financial conditions can go in both directions. And if they tell us, well, the long end's doing the work for us, so we won't, well, the long end will probably continue to come down, and then it won't. So yeah, it's a dangerous game to play. To be fair, that's why I tried to soften that. But it was a very dovish meeting overall for me.
OK, so it was a dovish meeting overall. We can debate at the margins about credibility. Did you fill in your MLive survey in terms of the bond market retesting and having another punch at 5%? I mean, how frisky is it going to get in this bond market? You're worried about a bit of indigestion. You're so polite. A bit of indigestion in the bond market. So if I have mild indigestion and no Gaviscon, where do bond yields test again? Do they break 5%?
Americans don't know what Gaviscon is,
It's the purple stuff for when you've got indigestion. When you get older, Danny, you'll know all about it. She doesn't know anything about this old age thing yet. Right, come on, give us your calls.
OK, so I was too busy preparing for the show to fill in the survey, but clearly 5% was a big technical level, and we've bounced off that a few times, and there was some heavy hitters coming out, adjusting their books and talking about it on Twitter. But we could push for that. We could retest it. For me, it's a question of timing. Does the retesting of changes in expectations about the neutral rate, about term premium or supply happen before or after we see much worse data, the consumer rolling over and the recessionary fears that would hopefully cause the rally in Treasury that a lot of people are depending upon?
Well, everybody's hoping for that, aren't they, Gordon? Thank you very much. Make sure you fill in your MLive survey the next time. Don't come on this show without having done it. Gordon Shannon there, 24 Asset Management, our guest this morning. There is an exclusive conversation to be had around this, Danny, isn't there? The Atlanta Fed President, Raphael Bostic, joins the Bloomberg team 3:30 p.m. Eastern Time, 7:30 p.m. London time on Bloomberg.
This is Bloomberg Brief. I'm Danny Berger in London with Manus Cranny in New York. Manus, there was some disappointment over Airbnb earnings yesterday. Let me read to you what this company said that led to this. They said we're seeing greater volatility in the fourth quarter, and they're closely monitoring the macro trends and geopolitical conflicts that may impact travel demand. My question for you, Manus, is you're in New York, the land of Airbnb. Is revenge travel over?
I would say probably they got the memo from you that you've actually run out of holiday leave on the system.
That's true.
And that this is, your time has run out. You've got no holiday left. And so that revenge travel syndrome is running out. But this is this is a much bigger story, isn't it? Which is whether the stimulus money is running out a little bit. The consumer, what was it you gave us yesterday? The consumer was under pressure. Consumer confidence is dipping despite the strong labor market. So this is critically important. The volatility, economic volatility, is dampening demand for travel. I can tell you what, the rents haven't gone down as a result of all this theory that they've opened up, Airbnb properties. Well, not yet.
Right. Well, I mean, I guess travel is a maybe, but you got to live somewhere. You got to pay rent or buy a place.
There's always space for you. There's always space for you here in New York. I can give you the couch. Emily Chang's going to sit down with the Airbnb CEO at 11:30 a.m. on Bloomberg. Welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. Markets rally. Jerome Powell hints the Fed may be finished with its most aggressive tightening cycle in 4 decades. Next up, it's the Bank of England. The central bank may hold rates as evidence grows that the UK economy, labor market, and inflation are all weakening. And earnings season rolls on. Novo Nordisk sales surge on the frenzy for obesity drug. We will speak with the CFO of Europe's most valuable company in just a few moments' time. Manus, the relief rally continues. S&P 500 futures up more than 0.5%. They liked what they saw from Powell, ISM, the quarterly refunding announcement, whatever it was. Bond yields came in and equities rallied more than 1%. The VIX, a big sigh of relief. We're back under 17%. We started the week above 21, just to give you an idea of how much we have moved. The concern is in these earnings calls, we are getting more mentions of weakening demand. When will that start to filter through perhaps some of the macro data? In the meantime, though, Europe picks up where the U.S. left off, up about 1.6%. Again, I mentioned Novo Nordisk sales, shares rallying there of the company with this frenzy around obesity drugs. And Manus, we will be speaking with the CFO very shortly.
We will indeed. Let's just put a little bit of imagery to that bond market move that you talked about. It was right the way across the curve, but the short end of the curve really reflects it over the past 2 days. We're giving back a little bit. We've come very far. Those were the words from Jay Powell. And they acknowledged the tighter financial conditions in markets, doing some of the legwork for them. But of course, introducing financial conditions and credit conditions was the shift in the language. Roll it over because you see at the 10-year government bonds, we saw the quarterly refunding come in at $112 billion. There's going to be $40 billion of 10-year paper. Let's have a look. We saw yields drop quite aggressively yesterday on the longer end of the curve. JP Morgan described a happy warrior on the markets. There's 10-year government bond yields are dropping ever so slightly this morning. At 471 is where we are. We'll bring that to you. There you go. 471 is where we are at the moment. We just had Gordon Shannon with us talking about indigestion potentially from bond market supply. That's what's going to be the issue for you there. The dollar has a vulnerability to it, according to Steve Englander over at Standard Chartered. But of course, Powell really tried to sort of ram home the point that we're far from cutting. But his dovish tilt was certainly something that the market took very, very seriously. And so too did the Japanese government bonds. This is yen. This is the dollar down. This is the yen rallying. This is everything that the Japanese want. And also their yields are dropping. Globally, what you are seeing is a repricing. If we are at the top of the mountain and if the bond market has done the dirty work, and as Jay Powell says, the dots have decayed, and that's really trying to take the heat out of the rest of this year. Danny.
Manus, that doesn't mean, though, that yields have peaked. We were just speaking, as you mentioned, with Gordon Shannon from 24 Asset Management, who said, judging by even just the market moves yesterday, you can tell they care more about supply. And that issue hasn't gone away. Well, the majority of respondents from our MLive survey, Manus, yesterday, right after the Fed decision, did agree with the idea that bond yields have not peaked. So let's just take a quick look at that. About 48% or so say that they're going to go up, but not above 5.5%, while Manus, 12.5% think the peak, it's above 5.5%.
Yeah, well, that's a heck of a majority. It could be just a short-term lack of digestion at the moment. That supply is still coming, and it's going to be a fountain that just simply is tough to switch off. Danny, let's change gears a little bit because we've got a European company now, one of the most valuable companies in Europe. It is Novo Nordisk, reporting a surge in the sales for the third quarter, driven by, you got it, the hot demand for the blockbuster obesity and diabetes drug. Joining us now is Karsten Munk Knudsen, CFO of Novo Nordisk. Good to have you with us this morning. 95% of your sales of Wegovy, I understand, come here to the US. You've talked about some of the challenges, the constraints, the supply chain constraints. How would you describe those coming into the US? Are they growing? Are they becoming more acute? Or are we on the verge of something more critical? Good morning. Well done on the numbers.
Good morning, and thank you for having me this morning. And we are out reporting a fantastic set of numbers, growing 33% in the first 9 months. And yes, part of that growth is clearly coming from our obesity franchise, reaching 30 billion and exceeding our strategic aspirations of 25 billion. And the main driver is the US, as you're alluding to. And in the US, Wegovy is really the growth driver, and we're in a situation where demand is clearly greater than what we're able to supply. So what we're doing in order to run a sustainable business is that we're controlling the intake of new scripts through the supply to the market of the lower doses. And that's something we do dynamically as we're scaling up supply.
Can I just get a read though on how that is changing per Manus's question? Is it starting to get better or starting to get worse? Where do you see it with the supply issue?
So we're continuing to scale supply, and when we go into 2024, you will see a significant step up in Wegovy supply to the US.
If we look at, again, the cost of this drug, and Danny and I were looking at some of this, if you're going to go on Ozempic or one of the drugs for a year, it's about $10,000. You still don't have private and public insurers convinced here that they're going to cover you. When will you get coverage? Are you closer to that point in the US? And if you get approval, what is it going to mean for the bottom line?
If we talk specifically to the US, then in reality we have around 50 million of patients or people with obesity today who have coverage for Wegovy. So we are actually quite happy with coverage, and the 50 million consists of to the tune of 40 million on commercial insurance and 10 million on different types of public insurance that could be Medicaid as an example.
So Karsten, I just really want to follow up to make sure we're getting a clear reading on this. When do you think you will get wider approval from regulators? What's your timeline on that? What are you doing to get there?
Well, so right now we are actually, in terms of U.S. coverage, we have good coverage in commercial, and we continue to build that. We're also building in Medicaid. As to Medicare Part D, which is the last main segment in the U.S. market, it's a political process. Of course, we're building a lot of evidence in the benefits of obesity treatment, also vis-a-vis the comorbidities and the SELECT trial.
So Karsten, then on just some of the issues and concerns about some of the side effects. We spoke to the CEO of Novartis last week, and he talked about some of the weight loss drug frenzy, the issue being some of the muscle mass loss. Just take a quick listen to what he had to say.
One of the questions is long-term use. How will patients stay on these medicines? Will they lose muscle mass over time? Will there be impacts on cardiovascular risk because of the impacts on heart rate and other factors? So these are all things I think the next generation of drugs are going to need to address. But I think it's important also from a public health standpoint, diet, exercise, some of the fundamentals can't be lost. Yeah. There's nothing that really comes for free when you think about longevity.
Karsten, I just wonder what you make of that, this concern that kind of you wouldn't think it, but as you lose weight, your body fat percentage actually goes up because you're losing muscle. How big of a concern is that to you and the folks over at Novo Nordisk?
Of course, patient safety is a starting point for when we develop and commercialize new products. And what we have been studying is of course also quality of weight loss, and that's also going into our research programs. But I would note that with the SELECT trial, which is reporting out at the AHA come 10 days from now, then we have a trial with patient exposure of between 3 and 5 years, where we're following patients and seeing how it impacts their cardiovascular safety profile, so to say, and the cardiovascular benefits. So I think we're building a lot of evidence of the benefits of treatment of semaglutide in obesity. And by the way, then the SELECT trial, what we're doing there is that we're doing something called SELECT Life, where we're actually going to follow patients for a 10-year period. So we're building a lot of evidence that documents the benefits of treatment.
But we're still very much in the early stages, Karsten. We're still very much in the early stages of understanding, using the drug and the repercussions. The biggest risk of all is, of course, that Eli Lilly comes in with Mounjaro. That will have less muscle loss. It will prevent less muscle loss. The risk for you is they steal market share and they scoop in on price. Are you ready to defend market share and preparing a strategy to cut price to defend market share when Eli Lilly comes along?
I'd say the strategic premise for your question, I would reframe, because this is really about driving volume. This is a large market with a large unmet need. The global market is around 800 million people or more with obesity. And today, branded prescription drugs are serving 1 million or so. So there's a very, very sizable and very, very long runway. So this is. So
you're not worried about Eli Lilly? You're not worried about them as a competitor? You're not bothered?
We have been competing with Eli Lilly for 100 years in diabetes, and we're happy to do so in obesity also. And given the market size, then there's more than ample of space for two companies to create the market.
Karsten, let me ask you about the market size. There's some great research out there from Citrini Research talking about the share of obese adults in the U.S. It has just climbed since the Great Depression and the potential for that to come in. Give me your predictions 10 years out. Do you think a majority or even a higher amount of American adults who are currently obese will be on these types of weight loss medications?
The short answer is yes. So when we look at the U.S. market today, then we're looking at more than 100 million people with obesity in the U.S. and we see a continued progression and a larger share of that. And as we build evidence in Novo Nordisk, but also across the industry about the benefits of obesity treatments with pharmacotherapy, not only on BMI, but also on all the associated comorbidities, whether it's cardiovascular disease or chronic kidney disease, I'm sure that a much larger percentage compared to today will be on GLP-1 type treatments.
Can we just close off with, obviously, if we look at these products and these drugs, the risk is, I mean, these are for very serious health issues, for obesity, for diabetes, etc. But if we look at where the brand is being taken on reality TV shows, very commonly picked up by people who I know who are not diabetic and who are not obese, the risk is that you have some kind of a serious backlash against these drugs. Are you constantly monitoring that? Are you preparing for some kind of moment of backlash when these products are used by people who are not in the set of people that you're supposed to, as it were, at a health level, target?
Patient safety and appropriate use of our products is our highest priority. So Ozempic is approved and indicated for treatment of type 2 diabetes, and Wegovy is approved for the treatment of obesity in people with a BMI of 30 plus or a BMI of 20 plus with comorbidities. So it's super clear, and that's everything we do on our commercial efforts, and we have significant patient safety monitoring across many channels, and of course very focused on ensuring that our products are being used the right way.
Karsten, I'm afraid we're going to have to leave it there. Thank you so much for joining us this morning. Karsten, Munk, Knudsen, CFO of Novo Nordisk, after a blockbuster earnings report. Now, coming up, we're going to dig more into earnings. Strategist Jay Woods of Freedom Capital Markets is going to discuss the earnings scorecard so far and what to expect down the line. This is Bloomberg.
It's Bloomberg Brief. I'm Menace Crenny in New York with Danny Berger in London. So we're nearly halfway through this earnings season, Danny, and we haven't broken anything yet. The main event, it's today. It's Apple. They're reporting after the U.S. market closed amid a bumpy quarter for big tech, to say the least. Jay Woods is with us, Chief Global Strategist at Freedom Capital Markets. Listen, you've sent through some charts. Good to meet you.
Yeah, good to meet you.
Let's just step back for a moment. Everybody's obsessed about a 200-day moving average. We're obsessed about this. 3 months of losses in equity markets. But I want your opinion, because for me, it's not a breaking of this market. It's simply a repricing, not an exhaustive exodus. Or have I read it wrong?
No, I think you're spot on. This is a normal correction in a bull market is what we're experiencing. If you look at the major index, and then we'll focus on the S&P 500 before we break down individual stocks, it has a 10% correction on average every 18 months. It has 5% corrections every year. We had 5% corrections, and now we've sold off 10%. We got to those lines in the sand, as we like to call them, levels of interest, that 200-day moving average, and we breached it for about 6 days. Ironically, 6 days below it in March, and we rallied. The key was, let's not stay below it for too long, because bad things happen under the 200-day moving average. That is the barometer of the market, and the barometer was like, all right, are we going higher or lower? We may chop sideways for a little bit. We're in a relief rally right now.
Bad things happen over the under the 200-day moving average, I think, is like my favorite sentence I've heard this year, Jay. It's excellent. It is poetry. Talk to me about Apple. We're going to get earnings today. We've seen some not great reception to big cap tech, except for Microsoft, maybe. What's on the line here?
Well, the line is kind of getting a little narrower when you look at the chart in Apple, and I see you have one up on the screen. Since its last earnings cycle, they actually beat, and the stock gapped lower. And since that point in time, it's been trending lower ever since. Every rally has been met with selling. So it's been a negative 3 months, and now we're starting to see a little bit of a change, a little line in that sand. In that 200-day moving average, we breached it briefly. We got it back above it. Yesterday, we had a nice pop. And where did we fall back to? That declining trend line from the last earnings cycle. So something's going to give here in price action. On average, Apple has about a 4.5% move up or down after earnings. I'd like to see it break back above that downtrend, that intermediate downtrend. And you talk about price action. Microsoft, they had a great quarter. And what did it do after earnings? It gapped higher and it closed on the low and it retreated. Yesterday, it finally made up for that recent loss, and we had a lot of events happening at the end of October that spooked the market. But Microsoft should have acted better, and now it's finally getting back on track. And if Apple, being 7% of the S&P 500, Microsoft, the second biggest weight in that index, if these two start to go again, then this seasonal November and December end-of-year rally is going to be led on their backs, and I think it's going to happen.
Okay, quick question from the three of us. Who's got a new iPhone 15? Hands up.
Certainly not me.
See?
Certainly not me. I'm working on like 12 or 11 or something.
I think I'm on 13, but therein lies the point. Yeah. Therein lies the point. I'm waiting for a deal from Verizon. Let's move along. Disney, a whole new world. They're getting their hands on Hulu. I know you don't want to talk dirty fundamentals, but they are.
We can talk. Yeah, I mean, they've got a lot going on. Iger's back. He's trying to, turn the ship around. He's got a lot more work than he anticipated. But when I look at Disney and I look at the price, when in doubt, we have an expression in technical analysis, when in doubt, back it out. So I look at this chart on a longer-term basis because if you look the last 2 years, it's been a disaster. It was one of the worst stocks in the Dow last year. It's down again year to date, and it's struggling at this $80 price point. But it's starting
maybe the Hulu deal will help.
Maybe it will be the Hulu deal. They have earnings next week. Maybe they finally do something with ABC and the streaming at ESPN. So there is a fundamental story that's going to drive the price action. And right now we're kind of in that balance. So what I like to look at risk-reward setups. And if you're going to enter Disney and you haven't been in it, all right, from a risk management point of view, you get in at this level. If it breaks below, get out, take your little loss, and move on. But the reversal that it could have is tremendous. And then if you look at that long-term chart, the 200-week moving average, this is the biggest percentage it's been below it in the last decade. So just a mean reversion is good for a 10 to 15% rally.
This is what I will say is Manus, you know, I can buy whatever iPhone I want, but I can't get Hulu. This is one of the benefits of you living in the U.S. and me not being there yet.
Listen, I'm grappling with a smart TV. One's going out the door today and one's coming in tomorrow. So it's like, you know, Hulu is the least of my worries at the moment. I can assure you of that.
Give the man good old-fashioned cable. That's all he needs. Hey, Jay. Thank you so much for joining us. We really appreciate your time early this morning. Jay Woods there of Freedom Capital Markets. Thank you so much, Manus.
Danny, well, if we haven't had enough of Hulu, Comcast, Microsoft and Apple, there are other market-moving events, but we'll probably reflect on some of those. Here's a quick check on the markets. Relief from the Fed intimating that they may have come very far and done a lot of the hard work. The bond market's done that. Spoos are up 0.5%. The dollar drops down. The dollar, of course, according to Mr. Englander over at Standard Chartered, is vulnerable. But then, of course, what happens in the economy next year can define that. Treasury yields will take another pop of 5%, according to Gordon Shannon on this show this morning. Good morning from New York and London.
Welcome back to Bloomberg Brief. I'm Danny Berger in London alongside Manus Cranny in New York. Let's get you set up for your trading day. Here's a look at what's ahead. The main event is the BOE rate decision. It comes at 8 a.m. Eastern. That will be followed by Governor Bailey's news conference at 8:30 p.m. Now, then at 8:30 then we're going to be getting U.S. initial jobless claims. Those will also hit at 8:30 a.m., not p.m. I'm getting my hours mixed up. Durable goods and factory orders. Those will hit at 10 a.m. And then finally, some big earnings today, Manus. We got Apple, Starbucks, Hyatt, hotels, Conoco, Phillips, all on deck. I can say, I don't know what's wrong with my brain this morning, but I can say I know Apple is after the bell. I'm very sure of that.
I just want everybody to know that there was a frenzy of emails from Danny Berger that came through this morning on the Bloomberg. It was like, what? You were on fire from the moment you got on the tube.
So many good stories today.
Yeah, I know. Actually, I was very grateful. I got to say to everybody, she sends in the material. She's on the tube way ahead of me. So big shout out to Danny. Qualcomm.
Thank you, Manus.
You're very welcome, Danny. It's a two-way street here. Qualcomm, the one line that I saw that I really liked from is that inventory, excess inventory, has now been cleared, and they expect revenue from China to jump 35% on Qualcomm.
I also feel like this finally eases some of those concerns around the chip makers and AI because this earnings season has been so spotty. Does what we hear from Qualcomm mean, hey, maybe some of the slump is finally easing? Maybe we can get cheery about AI once again. Yeah, but I want to get cheery about anything. It's a bit when I rang the pension advisor, I said, I don't think we have any Tesla. He said, you have an entire exposure to Tesla. Stop worrying. Let's have a look at the bond market. If you're in the S&P, you're in Tesla.
Well, it's in some ESG fund, apparently. Right. Okay. That was a shock to me. Here's the bond market. We're losing it this morning, Danny. You're looking at gilts. You've got gilts actually coming down more than the bond market because it is BOE. Do you believe the Bank of England will no longer have to cut rates, Danny Berger? No longer have to hike rates.
Idea.
Hike rates.
I mean, what? Maybe it's a cut next. Who's the first to cut? Is it BOE? Is it ECB? Is it Fed? Maybe we're not in a place yet to debate that. Anyway, that's it for us. Surveillance is up next. This is Bloomberg.